I have passed over 7 $100,000 prop firm challenges. I use prop firms to quit my job, and I've been running my own prop firm for over 3 years. So when it comes to passing these challenges, I'd like to think I have pretty good experience and pretty good knowledge on doing so. And so in today's video, I'm going to be taking you through step by step how I approach these challenges. And this is going to be a daily series that we're starting on the channel because I want to share with you for completely free, no gimmicks, nothing to hide, nothing to sell you. I want to show you how I approach these challenges with a professional mindset. If you are tired of traders on social media just completely gambling away these accounts and telling you that you have to spend tons of money on these challenges to try and pass one, we are taking the exact opposite approach. It's going to be all about quality over quantity. It's going to be about looking at fundamental analysis, looking at what's going on in the world and how we can apply that to our trading the higher time frames, the 4-hour, the daily charts, and putting all of this together to pass another 100K prop firm challenge. So if you want to become a funded trader, if you want to take one of these challenges, if you want to make money with trading, I'm just going to share with you exactly what worked with me, what worked for me, and hopefully you'll get some value out of it, and hopefully you'll get one step closer to becoming a funded trader yourself. So first things first, we have the challenge itself. So my prop firm Lark Funding, been running it for 3 years. Obviously, I'm going to be taking a challenge with Lark Funding. I'm going to be sharing everything. I'm going to stats, all the metrics. Maybe I'll fail, maybe I'll pass, but I'll be taking you along the journey with me. So signed up for a challenge, got my account credentials instantly. Now, what challenge am I going to be taking? Many traders prefer the 2-step challenge, but I actually prefer the simplicity of a 1-step challenge, and that's the one that I'm going to be taking. So the account gain target is 10%. So just have to make 10% in one phase. There's no phase 1, phase 2. The max static drawdown, so at least there's no trailing drawdown, is 6%. Have a 5% daily drawdown limit, but we're not going to be getting anywhere even remotely close to that. Leverage is plenty at 30-1. No news restrictions, no consistency rules. It's probably the cleanest, most straightforward challenge there is out there. So I need to make 10% on my 100K account. So I need to bring it up to $110,000. I'm going to be doing it on C-Trader. So this is a very raw video. You're going to see exactly how I approach these challenges. My charts aren't marked up whatsoever. I have no idea what trades I'm going to be looking at, what pairs, what setups are on the horizon. All you can see are these moving averages that I have. But aside from that, I've got nothing really going on. So the first thing that I like to do is obviously do my fundamental analysis, which I'm going to do shortly. So hopefully that's something you guys are interested in. I really think if you're trying to differentiate yourself, if you're trying to break away from the 90% of traders that fail, you need to do what 90% of traders are neglecting, what they're avoiding, what they're not doing, which in my eyes is fundamental analysis. It's understanding why the market is moving the way that it is. So I'm going to break that down in a really easy to digest way, but because I know a lot of you start with the charts and you're interested in the charts, that's what I'm going to be doing. So in maybe tomorrow's video, I'll do more of a top-down analysis on different pairs. So let me know in the comment section what you would like me to do. I usually go from the daily to the 4-hour to the 1-hour, and then maybe the 15-minute for executions, but that's a maybe. I am here on gold. Gold obviously reaching all-time highs, so I would like to see some sort of pullback to a fib retracement level. So probably somewhere around 38 fib, but again, that's going to take several days. So I don't think in the near term there's going to be anything on gold until we have a pullback. Pound yen is another asset, another currency pair that I like to trade. I can see here just from a broad high level overview, we've broken through all of these moving averages, and now we're having a little bit of a retracement. So I can already see here I'll want to drop down timeframes and refine the area a bit, but I think there could be a nice buy opportunity lining up here as we retest this support level. If I go down to the 1-hour, it'll be a little bit more clear. I think we'll draw this guy here. And again, my entire strategy, if you're new to the channel, is really straightforward. I think it's something that a 10-year-old can implement. My entire philosophy is that less is more. I'm all about quality trades over quantity. And so all I'm looking for is I'm looking for these zones of high confluence. That's going to allow me to get those sniper entries that we're all addicted to. So in other words, to explain it even more simply, I'll use trend lines, moving averages, Fibonacci, key levels, fundamental analysis. I think I'm missing one, but I'll use all these tools individually, and then I'll look to see where they line up, and where they line up is where I want to take a trade. So I'm looking for a zone where there's 2 to 3 to 4 of these confluences lining up. So I could see here on the 38 fib, we have this moving average and the 38, and it's also coinciding with a support level around here. So this is a zone of interest. So I would draw a rectangle here. That looks good there. And then if you're new to CTrader and you're looking to kind of optimize the flow of things, we can get rid of that bottom right now because we're not taking any trades. CTrader is honestly way better than MT5. If you're new to it, don't be overwhelmed by it. It's such a great platform. So I'm obviously interested in this here. And the beautiful thing about CTrader is you can set alerts. So I can throw an alert there. I'll get an email notification. So approaching potential buy area. So again, if you have questions about how I'm doing this, I'm going through it very, very quickly. You can just drop questions down below and I'll answer them in tomorrow's video because I think it's fun to have sort of a daily style video. The 50 obviously looks really good as well. So I can copy and paste this guy, put it there. Whoops, there we go. But I don't think there's anything, this is the 1 hour chart. So this is gonna move pretty quickly. So I could throw a pending order on here, which I suppose, I maybe could. I'll put a stop loss, around, I can be pretty tight, 13 pips or so, and then want to ride it up to maybe here or higher, but obviously I would monitor it. So this is very, very rough, and we'll increase this to, let's do to start, that's a 0.6% loss, 8, let's just do that just to start. Perfect. So that's what's going on GJ. We have Bitcoin here. Am I going to trade it? Who's to say? We're actually getting a little bit of a nice retracement on the 30-minute, retesting this here, but I think it would be a little foolish to, take a sell right now. So maybe I'll throw a box on here. I kind of want to take the sell right now. We'll see what it does moving forward, and then maybe tomorrow it'll be funny to see what it's done. So let's hop over to trading view quickly. Let's scroll through these, see if I'm looking at anything, and then we're going to look at what's actually going on in the world. How do I determine what is worth taking? So I can see here on pound yen, this buy area, which I already outlined. On Aussie yen, we're trending really well, so I'll want to pull back. Looking for a sell, we've got this guy here. So again, really quickly just scrolling through, you can see how, if you've been trading for, I've been trading for almost 10 years now, you can kind of catch things really, really quickly. Again, nothing going on here. It's a holiday today, so things weren't really moving whatsoever. So pound yen is going to be looking interesting. Bitcoin, obviously, for that short could be fun. But that's what I'm looking at for now. What I really want to go over with you guys now is this high level idea of how I approach the market. So my philosophy is that I want to know what the market is doing before I even open a chart. If you can achieve that, if you can get to that level of market understanding, your whole life is going to be so much easier because you're going to understand, well, should I be buying or should I be selling, right? Where are the biggest moves going to take place? Because volatility as a trader can be scary, it can be overwhelming, but ultimately that's where we make the most amount of money, right? Those trending markets, you can't really make money. You need the market to be trending in order to catch those bigger moves, and you can only really catch them if you know how to position yourself. You only know how to position yourself through fundamental analysis. So if you're not subscribed to Pip Munch, again, 100% free. I would highly encourage you to subscribe down below. The daily newsletter for traders. It breaks down what's going on in the trading world at a 5th grade reading level. So it's none of that, CNBC nonsense where, these publications want you to feel dumb. That's not what it's designed to do. So 25,000 traders get this every single morning. It's entertaining, it's fun, and it will hopefully allow you and help you to become a better trader. So what's actually going on in the world? How can we find those trading setups? Inflation's back, tariffs on trial, Canada tanks, gold makes history, silver won't quit. We can see here the numbers last Friday, and this is really important. So the NASDAQ dropped over 1%. The S&P 500 dropped 0.6%. Bitcoin dropped 2.3%. So what does this mean, right? What does this mean as a trader when you see this? Very straightforward. As soon as you see everything dropping, once you see, the stock market indexes dropping, the first thing you need to think of is, oh, that's a risk off sentiment. That means that for whatever reason, and we're going to look at the reason, but for whatever reason, the market is a little bit scared. The market is pessimistic. And so traders and investors are looking to take risk off the table. Whereas if we were risk on and everything was green, it would be a different story. It would mean that people are optimistic, people are looking to take on risk. And this translates to our Forex trading, it translates to all the assets that we want to be trading. So why did things actually drop? It's important that you understand. It's because of the PCE reality check. So this happened last Friday. The core PCE, it's the Fed's favorite inflation gauge. It jumped 2.9% year over year in July, which is the highest pace it has been since February. So in a nutshell, if you're new to this, the Federal Reserve is thinking about cutting interest rates. When you cut interest rates, it's usually very good for stocks, but it's bad for the dollar. So there's that inverse correlation that you need to understand. So if it's bad for the dollar, it means it's good for gold, that inverse correlation. But when you cut interest rates, it tends to stoke inflation, right? And the Federal Reserve, everyone doesn't want that. I mean, Trump maybe wants that because he really wants rates to cut, rates to go down. So the reason that stocks dropped is because with inflation being higher, it means the Fed can't be as aggressive as they want to be in cutting interest rates. And as a result, that's bad for the stock market. And so that's why stocks drop. Okay? Now, what's interesting to understand, or what's important to understand, is what's going on in the prediction markets on poly market. Fed decision in September, there's now an 82% chance of a 25 basis point cut. So what does this mean? We're traders, we're looking at setups. We know, okay, the market doesn't just care about what's happening today, it cares about what's going to happen tomorrow. And right now, the market thinks there's an 82% chance that the Federal Reserve is going to cut interest rates, which means the market is going to front run that move. So why have stocks hit all-time highs? Why has the dollar already dropped 10% this year? Because of this. And if this does take place, that trend is likely going to continue. None of this is financial advice, of course. So that's what's going on with the market. We shifted short-term Friday to a risk-off environment. We have to keep that in the back of our mind because that could continue. Okay. Trump's tariffs on trial. This is another market moving event. President Trump tariffs ruled illegal in blow to White House trade policy. And of course, the decision quietly dropped on Friday. So an appeals court just ruled that a bunch of his tariffs were illegal. The judges basically said, nice try. Why do markets care? So fewer tariffs could mean less inflation pressure and smoother supply chains, but here's the catch. Trump is already appealing. Traders hate uncertainty more than my wife hates me checking charts at date night. So this overall is just adding more uncertainty into the market. Uncertainty leads to volatility, or it leads to consolidation. And so we have to keep an eye on this as it develops. In terms of Canada, Canada is a disaster. I'm Canadian, so I can say that. Officially in a recession, Canada's economy declines 1.6% annualized in Q2. It's the biggest drop since the COVID pandemic. Mark Carney, the new prime minister, has been a disaster. He hasn't met with Trump, hasn't wanted to make, or hasn't attempted to make a trade deal. It's a total disaster. And so when you see the headline of a country saying they're in a recession, right? It's Canada in a recession. US, as an example, in a recession. Are you going to want to invest in that country? No, of course not. So then you would say, okay, if we're trading USD CAD, right? Well, what's going on here? What's going on over the last year, right? A little bit of downwards movement because the dollar has weakened so much, a little bit of a rally in the last little bit, but a lot of sideways movement, okay? Because they're both weak. The Canadian dollar is very weak and the US dollar is very weak as well. So we have to keep this in mind if we're going to be trading USD CAD. Okay, so moving forward, okay, we're reading all of this. We're trying to bring it all together, and then we go back into the charts. Commodities, gold mooned, Bitcoin tanked. Wait, aren't they supposed to be bros? So a lot of you watching trade gold. Gold is, a crazy asset to trade. $3,500 an ounce for gold, hitting all-time highs. Why is this? Okay, gold soared as traders hunted for safety amid weak consumer confidence, a shaky labor market, and ongoing geopolitical tension. So when you see gold moving higher, you have to say to yourself, this means it is a risk-off move, right? The dollar, it's hard. Gold's a bit tricky because yes, it's a safe haven, but because of its inverse correlation with the dollar sells off typically when things are good because people want stocks. I know it's a little bit all over the place, and it can be difficult to totally understand what's going on with the correlations with gold. But what you need to know in this situation is gold is hitting all-time highs because the dollar is so weak. Okay, DXY right here, you can see it's just really not doing so well. And so my bias right now when it comes to taking this prop firm challenge, my bias is going to be short the dollar. Now, of course, it depends what I'm trading against, right? If it's USD CAD, there's a lot of consolidation. So, could be a different story. But overall, I'm not very bullish on the dollar for now until something changes. And as for Bitcoin's been dropping as well. So if you trade stocks, you could take a look at these guys. So this is just giving you a little sense of what Pip Munch is and the value you can get every day. Of course, absolutely for free. This one's interesting. The Warren Buffett indicator is flashing a major alarm. But Warren Buffett indicator shows the valuation of stocks. So it just hit 215%, which shows the most expensive stock market valuation in history, which is absolutely insane. So again, we have to think about this. Ooh, if the stock market drops because valuations are so high, that's a big risk off move. The dollar will strengthen, as just one example. So again, we're bringing all of these things together. So when it comes to taking a trade, to finding setups, I want to make sure I'm aligning myself with this market sentiment. Now, if you're trading, for 15, 30 pips, you don't necessarily have to align yourself with the bigger picture. You can make money with just technical analysis, but if you want to catch those bigger moves and if you want to increase your win rate, not just about catching the bigger moves, if you want to win more trades and avoid losses, understanding what's going on and positioning yourself accordingly can make the biggest difference. So the market is slowly starting to open up from Labor Day. We can see here on the 1 hour chart, gold's at all-time highs. If we come back to C-Trader, we have gold, GJ, GCAD. I traded a lot of pound New Zealand. So if we throw up pound New Zealand and we see if there's any setups, this is the 1 hour. Definitely bullish, very bullish. We've had a little bit of a pullback to this area here. We're moving higher. Pound New Zealand for a swing trade to the upside could be very interesting. This was a nice buy here from this low fib here right off the 50. So that's interesting. But if we were to enter now, right, our stop loss would have to be 47 pips. So that's no good. If we did want to take a shorter term sell, if I were to draw the fib from here, we bounce off the 50. So I think the 61 with this resistance could be very interesting, especially if it's there with the trend line third touch. So that one looks good. I'm going to set an alert as we get closer to it. We've got that guy there. Pound New Zealand, pound yen, pound CAD. I think we looked on TradingView, Aussie yen, huge uptrend, very interesting. So any sort of small pullback there would be good for a buy. But all of that to say, we've got pound yen potential buys lining up, maybe something on pound New Zealand. We're going to wait for a larger pullback on gold, which might not even happen, and pound CAD, something down here could be interesting. I'm going to set an alert on this as well. Hopefully this gave you a sense for how I approach my prop firm challenges. This is going to be a daily series, so I'm going to take you along with me. If you have questions, maybe each day I could have a little segment where I answer those questions. So drop them down below. Let me know what you think, and I will see you tomorrow. Cheers.